And a warm welcome for our quarterly results, the third quarter of financial year 2026. Today's conference will be addressed by our Group CEO and MD, Dr. Anish Shah, Executive Director and CEO, Auto and Farm Sector, Mr. Rajesh Jejurikar, and Group CFO, Mr. Amarjyoti Borua. Requesting our friends in the media joining virtually to please type your questions in the chat box. We will take them after the presentations. So can I now request Anish to come ahead, please? Thank you so much.
Good afternoon and a very warm welcome to everyone. A couple of quarters ago, I began this call with saying that I'm delighted with the results. As we look at the numbers we have this time, the growth actually far exceeds the quarter when we were delighted. So I think we need to find a new lexicon of words to start describing performance. But that aside, let me just say all our businesses have done exceedingly well. And I want to start by thanking all our teams for the efforts that they've put in what has been a very, very good quarter. Key messages for us: a continued strong performance across our businesses. Operating profit after tax is up 66% across the group. And reported profits are up 47%, and we'll talk about where the differences are between operating and reported. Volume and margin growth continues to be very strong for both auto and farm. 23% volume growth for both of these businesses. A 90 basis point margin growth for auto, a 240 basis point margin growth for farm. Farm did have some impairments for international, and that has caused the overall results for farm to be slightly lower, but domestic performance has been just amazingly strong. And there are three businesses I want to highlight as breakthrough performance. One is Mahindra Finance, and you would have seen those results for all of these companies, in fact, declared by those businesses over the past couple of weeks. But Mahindra Finance is up 97% from an operating standpoint, excluding a previous year provision release. Our life spaces business profits are up 5x, but more than the numbers, just the trajectory the business is on and the focus on residential, what we are seeing in pre-sales, what we are seeing in completions, in profitability is very strong. And our logistics business has the first profitable quarter after 11 quarters, but again, beyond the numbers there, the focus on execution is very strong right now and putting that business on a very, very good track. So not just a great quarter in terms of numbers, but also in terms of the underlying momentum that we are seeing across our businesses. Here are some details by business on the operating profit after tax. And what you see here is the operating PAT on the left-hand side, the one-timers in the center, and then the net result of the operating PAT on the right-hand side. What I will start with is three numbers at the bottom of the page, where you see 66% for operating PAT, 54% for profit excluding the labor code only, and 47% growth from a reported standpoint. So those are the three numbers that we're focused on. As you look across all of these, life spaces a 5x growth in operating, logistics 2x, Mahindra Finance 97%, auto 42%, tech and 35%. You just see amazing numbers across the page here. And the one-timers are essentially the labor code impact across each business and the provision release for prior year for Mahindra Finance. These are the two specific one-timer. In addition, there are two aspects to operating income that we point out on the note section on the right. One is the impairment for our international farm businesses, and the second is the gain on sale from CIE, both of which are in our operating numbers, but we could just call them out separately. On a consolidated basis, revenue up 26% and profits up, reported 47%, excluding labor code 54%, and as I said earlier, from an operating standpoint, 66%. Let's look at some of these drivers. Auto and farm continue to capitalize on their market leadership. Profits up 42%, SUV volume up 26%. Continue to be the number one SUV player. strong execution driving our margins, and our new product launches having done extremely well and positions us well for the future also. In addition to the revenue market share, for SUVs, we also have gained market share from LCVs, and that continues to be a strong business at a 51.9% market share. Farm domestic volume up 22%, exports up 36%, and with the operating leverage, margins up 240 basis points. There are some actions on international that we will talk about, and with that, we've seen good market share, slightly lower at this point as compared to previous year, but something that we made up in January, and revenue for farm machinery is up 45% as well, as that business starts firing on all cylinders also. Mahindra Finance spoke about the prior year reserve release, and as we look at that, it's a 97% jump year over year from an operating standpoint. But more than numbers here again, what we've looked at for this business is, for the last 3 years, we've focused on getting asset quality under control, which is under 4.5%. It continues under 4% now for many quarters. Second, getting a very strong set of controls. And third, technology and data. As this business has delivered on all three very well, we are now pivoting to growth, as was discussed in the Mahindra Finance earnings call a couple of weeks ago. TechM continues to win deals across verticals, has expanded margin, is on track for the path that we promised through F27. As we look at our growth gems, talked about logistics, we're seeing very positive momentum in auto and e-commerce. Hospitality, we've had a foreign exchange impact with the euro being much stronger, and our business in Finland and the loans that it has had to be marked to market, and that takes away the profits effectively from our domestic business, which has done very well. As room inventory continues to grow, number of members stays at a strong trajectory. We are bringing down the cost of acquisition for members as well, and the business has recently announced its transition to moving from just timeshare to moving into the entire leisure hospitality space. And you'll hear more about the performance of this business over the next few quarters as it transitions through that space. Real estate continues to be extremely strong, both from the IC and residential standpoint, and this is something that you will continue to see for the next few quarters. The standard page that we show every quarter, ROE continues to be above 18%. It is 20.1%, but as you've heard from me before, we will stay with 18%, and we may be slightly higher or lower, but we will continue to drive faster growth. And you are seeing faster growth now, and we've seen year-to-date EPS up at a very strong level as well. We are up 38% from a year-to-date standpoint. And with this, let me invite Rajesh for further details on both auto and farm. Thank you.
Hi, good afternoon, everyone. Anish has covered some of the points, but I'm going to quickly skim through it. So you saw the SUV volume go up by 26% in the quarter. The LCV volume go up by 20%. The LCV has, is a growth that we've been waiting for a long time. And it's good to see a revival in the LCV segment with the 20% growth. We did gain some market share and are at 51.9 now. And the revenue market share in SUVs continues to be strong and growing. This shows you the movement of volume and market share. We've added the EV market share, which is at the bottom within the data on top. So on the left, you see a big increase in the Q3 volume. Some of that is the shift that happened from Q2 to Q3 because of the GST transition, customers waiting. So we have to average out Q2 and Q3 a little bit. But even if we were to do that, it's a 17-18% growth in volumes. We continue to be the #1 EV player by revenue market share on the YTD period, and in Q3 that was at 33%. We launched the 7XO. It's got a very good feedback. We can talk a little bit more in the Q&A, but a very strong proposition which has got very, very good traction. We started the first round of deliveries in January. EVs we've sold now in 10 months over 41,000 numbers, which is roughly going at an average about 4,000 a month. This was before the launch of the 9S. Interestingly, as you see the data there below, the cumulative vehicle have driven over 32.56 crore kilometers. And anecdotally, that's like doing 8,000 laps around the earth. So that's the quantum of running. So it's not a niche car being parked in the garage. The 41,000 vehicles we've run are actually being used as mainstream vehicles. Both the brands have won a lot of awards, and a few EV of the Year's award for 9E and a couple of Car of the Year awards as well. The 9S has also got a very good response, and deliveries are just starting just started about a week back. Again, very good feedback, and we can talk more in the Q&A on the response that we've got to 9S and what is triggering that response. This was a question that was coming up, so we thought we'll address it up front, which was kind of seeking clarification of when we had said we will launch a certain number of models in calendar 2026, what did we mean? So we had said 3 ICE SUVs, 2 BEVs and 2 LCVs. The new nameplate out of that was 7XO, which is done. Refreshes which we had not indicated in the 3 were the Bolero and Bolero Neo. That's got done. And 2 more refreshes, not new nameplates, are expected to be launched in the calendar 2026. The BEVs, we had said 2. One is the 9S, the other is the B Formula E edition. In the LCVs, we had said 2. We've done 2, and we have 2 more in the pipeline for this calendar year. Just a slide to kind of briefly talk about what's happening on capacities. In calendar year 2026, we do want to increase both ICE and EV capacity. We'll see going up somewhat. That's more debottlenecking in Chakan and in Nasik. In calendar 2027, we have spoken about this earlier. We would see the new IQ platform first products start coming out of Chakan. So we would see a capacity increase happening in Chakan to enable the first lot of new IQ to come out. And in calendar 2028, we will have the first products coming out of the greenfield in Nagpur. And that's something we announced recently, and we can take some questions on that if you like. LCVs, you saw very big growth again in Q3. We spoke about that. Market share still is very strong, over 50%. The auto margins continue to be very strong. We've gained margins again. 10.4% was the margin excluding EV contract manufacturing, which we do in M&M, and that we will show you separately as we always do. So broadly, this is how that looks. So 10.4 is auto standalone margin. That's what we saw. We make a 10 crore PBIT on the conversion cost of the electric vehicles which get made in M&M, which contributes to about a 0.4% margin, and that brings the auto standalone as a reported margin to 9.5%. We'll look at the profitability of the EVs end to end. So MEAL as a standard company, which is the electric vehicle SUV company, made a EBITDA of 149 crores. The 112 crores loss is on account of depreciation. We made another 27 crores EBITDA in M&M on account of conversion cost, which makes the end-to-end EBITDA at 175 crores for the quarter. A quick update on PLI status. XEV 9E, all variants have qualified. XEV 9S, Pack 3 and Pack 3 above have qualified. Pack 1 above and Pack 2 above are expected by Q1 of F27. And B6, all variants are expected to qualify for PLI by Q1 of F27. Trucks and buses saw a robust growth in volume, as you can see, 36%. We also gained some share YTD. As you can see, the YTD F26 share gain is about 0.2. So we are at about 6.1 combined market share between SML and MT and Mahindra Trucks and Buses. Last mile mobility, we continue our market leadership in Q3. And the very interesting thing here is now the penetration of electric in the three-wheeler segments is at 30%. So we are seeing a very strong adoption of electric in this segment. When we look at auto financials, consolidated, Anish covered this, so I'll quickly do this. Revenue in auto was up 30% and PBIT was up 30% as well. PAT was up 42%. On the FES side, very strong volume growth, 23% growth, 150,000 volume. Though we lost 0.2% market share in the quarter, YTD F26 we were up 20 basis points. The share gain chart, which we always show, shows a very strong, robust 44.1% market share. Farm machinery, Anish alluded to, has been showing a very strong growth and a very consistent performance now. So all through Q3, each month crossed 100 crores revenue. The margins, the tractor margins is what we focus on. So when you see the core tractor margins are at a very, very healthy 21.2%, which has gone up from F24 by 4.3 percentage points. We show you always this chart. Of course, right now we are on a very strong industry growth, and that does reflect in the margins being stronger due to operating leverage. But the point we make is, irrespective of what's happening to industry growth, the margins operate in a band between 17 and 21%, and that's what you see on this graph. The farm consolidated, we spoke about the impairments, which brings the PBIT down by 7%. At a PAT level, that is up 7%. But you saw that overall domestic performance is very strong on margins and revenue and volume growth. With that, I'll hand over to Amar. Thank you.
Thank you, Rajesh. And just very quickly reiterating the key messages you heard today, extremely strong performance from across the group, which has resulted in consolidated profit up 47% on a reported basis. This does include 220 crores of labor code impact. Just so that you know, across the group, that number is 565 crores of labor code impact for us, because what we take is our share as M&M parent. But across the group, that is roughly a 565 crore gross impact. And it's primarily come from gratuity. We didn't have too much impact of leave or any other provision. So gratuity was the biggest driver of it. This just shows you how each of the pieces is contributing. And I want to call your attention to the growth gems, which are up 3x year over year. The other thing, of course, is to highlight that TechM continues on the trend that we have been seeing from them. They met their external commitments throughout this year, and we expect them to also close strong, and then we'll see next year how the team performs. CIE was a sale of shares. This is a company where we hold some stock in it's a Spanish company that you're aware of. We sold some and made a gain. That's exactly offsetting actually the impairments we took in the farm sector. So effectively on an operating basis, it was a net wash. There wasn't any positive coming out of the sale. It offset the impairment that we took on the farm side. So that 47 represents true performance across all group companies, like Anish showed you. And very quickly on standalone, want to highlight again the fantastic performance that Rajesh just talked about. I will call out within that 3931 number, there is a 73 crore impact because of labor code, which belongs specifically to the auto and farm sector. And one thing that we don't talk about on a quarterly basis but want to highlight is that our cash performance also was very strong this quarter, and we continue to build a very strong balance sheet along with this operating performance. Okay. Thank you, and I think we'll transition to questions now.
Thanks. Can we get the chairs, please, for the Q&A? May I request those who are present here to identify yourself and the media house you represent before you ask the question? All right, the first question from the room. Yes, please.
Hi, this is Anjali Panod from ET Now. I have two quick questions. One is on the loss from investments related to subsidiary associates and JVs. That is up 4 times year on year at 375 crores. So could you give us some insight into where this is coming from? And secondly, on the auto and farm. Now, last quarter you had revised your tractor industry guidance to a low double digit. We've seen a very healthy performance this quarter as well. So is there any revision on the guidance there?
You want to take the first?
Yeah, sure. So the loss from investments, you're talking about the standalone results, right? The 375 is effectively coming from m&amp, which is our entity in Japan. The impairment that you saw on the final presentation, final pages, is effectively split into 2 entities that we have taken impairments on. m&amp in Japan, which we announced a while back that we are restructuring those operations. And the second is Erkunt Foundry, which is a Turkish entity where we have been seeing the negative impact of hyperinflation in Turkey.
Sarish?
We would expect it to be the industry for the year. So we were, of course, we underestimated what the industry would be like when we said low double digits. It's likely to be twice of low double digits. So somewhere in the 22 to 24% for the year.
Yes, Madhya.
Hi, Madhiha from CNBC. I have 3 questions. First, what is the passenger vehicle or SUV segment outlook for Q4 and FY27? Then in the tractor segment, while you continue to be the leader, there was a minor dip in the market share in Q3. So any specific reasons for that? And third, how is the demand for new launches, especially XUV 7XO?
Yeah, so on the first one, it's a little early for us to give a guidance leading into next year or even the quarter. The quarter overall demand outlook right now seems very robust, and we would expect to see high growth rates for the industry as well for us. I think everyone is going to be constrained by capacity because the demand right now is probably stronger than the way supply is able to ramp up. So that's on the first one. On the second one, can you repeat? The tractor market share is linked to mainly supply issues that we had in Swaraj by way of the huge increase in demand that happened through festival season. We didn't have enough supply, and of course when you see the Jan numbers, that's been made up. Can you repeat the third question?
The demand for
The 7XO, yeah. So on 7XO, as I said in my presentation, we've seen a very strong demand outlook. Multiple things have worked for us, bringing in the 3-screen across all variants, significant improvement in the ride quality through the Da Vinci suspension. The interiors have been very well received, as also the exteriors. The skew is to the top end. So we, even though we've introduced 3 screens at the lower end, we've seen a huge amount of bookings skewed to the top end version or the top 2 versions. which has been the trend in the XUV 700 as well, so that we saw continuing in. 9S has also been a very strong response. We had mentioned the last quarter that in the north especially, people did want a more conventional looking SUV form, and in a way 9S meets that requirement of a more conventional SUV form, and it comes in a 7-seater. So, as we've kind of established some or overcome a lot of the barriers that may have been there around EV adoption, example, range anxiety, there is a very strong word of mouth now that you get 500 plus kilometer range in the city, the reliability is established, all of that. So, as the 9S comes in, many of those barriers have been overcome, and there's a very strong demand because it is the only major mainstream 7-seater in that SUV format. So both the 7XO and the 9S have got very good demand. Thank you.
Yeah, Venkat.
Hi, sir. So, two questions. First, in the ICE range, you said that there are two updates due this year. They are two separate products, or from one range of products, the updates will come?
Two separate products.
So, separate lines. And then from BEVs, you've again said two products this year. So, it's two completely new products, two new body styles?
No, the two we said are already launched. So we had said two, and the two are already launched. One is the 9S and the other is the Formula E edition. So there's no new EV expected in the calendar year of 2026.
So, and finally, more diesel demand for the 7S or petrol?
For the 7XO.
Yes, sorry, for the 7XO.
Yeah, it's more diesel. I think 70-75% is diesel, which is roughly the ratio that we've had in 700 as well.
Thank you, sir.
About 25-30% is petrol, rest is diesel.
Yeah, Anjali.
Hi, I'm Ashutosh from Informist Media. So my question is, what is your current network stock and inventory days like?
In auto?
Yeah.
About 15 to 20 days, depending on the product.
Okay, and so what is your assessment for the appropriate network stock and
Sorry.
what is your assessment about the appropriate network stock, and when do you see M&M reverting back to those levels?
Sorry?
When do you see M&M reverting back to those levels?
So we are below our normal stock. Our normal stock is 25 to 30 days, so we are below that. I think what we got to understand is we have a very wide variety of products with versions. When you look at average stock, it is also based on how much variety your product portfolio is offering. So typically we would expect our dealer stock to be close to 30 days. It is lower than that. So over a period of time, we would want to bring our stock back up to higher levels.
Anjali. Okay.
My name is Kanchan. I am from CNBC Awaaz. As you have mentioned in your presentation as well that you are number one in electric three-wheeler. So what is the timeline and strategy to meaningfully scale the SUV along with the capex plan for over next few years? And the second question of mine is about the Mahindra life space business. What is your outlook for that as it turned profitable after 11 quarters?
Okay. I'm not sure I understood the first question. So can you just repeat it?
I'm asking for the capex plan in the electric segment over next 2 years.
Okay. You had a question before that as well, or was that just a comment?
Yeah, that's just a comment.
Okay. So the capex is in line with what we've already announced as a part of the 27,000 crores over a 3-year cycle. Out of which 12,000 crores was in EV. That was a 3-year cycle, and we are on that number in this cycle.
Okay.
But you want to add?
No, and in May when we have our annual results, we will talk about kind of the outlook for the coming year. We are still working through our budgets and all that for next year.
And my second question is like, Mahindra Logistics turned profitable after 11 quarters. So is this a structurally profitable now or dependent on operating leverage?
It is a business that is structurally profitable. It is one where we've had some weaker execution in the past that has been corrected now, and the business is now on a very strong path.
Okay, thank you.
Swaraj and then Janki.
Thank you. Sir, India has had signed 3 trade deals in recent months. Although EVs have been kept out of those deals, is there anything for Mahindra specifically as a takeaway from any of these deals?
Yes, one word, opportunity. Let me expand on that. There has been a lot of conversation around how will this impact us. But there are various European models in India today. And take any of those models, I won't name specific ones. That OEM cannot make them in EU, pay the shipping cost to send it here, bear the inventory cost for that time period, and have it come to India cheaper than what they already have here. So it doesn't impact us from a competitive standpoint at all. Where it does impact India is if the economy is completely opened up, there is a possibility that people may use unused capacity in Europe to send vehicles to India and close down plants in India. There are manufacturers who announce closure of plants in Europe, but why would you close a plant in your home country when you can close a plant somewhere else? And which is where I would give the government a lot of credit. I think they balanced it really well. They opened up the economy to be able to get more cars into India, which is a positive. At the same time, they've set it up in a manner where European makers do not shut down plants in India. They would keep the plants in India open and look at a bigger market in India as they bring their cars in. We want more manufacturers to set up plants in India. That is good for the Indian economy. That is good for us as a manufacturer. That creates a bigger ecosystem that makes us more competitive. The reason China is very competitive today is because of the scale it has. We want that scale in India. So we are fully aligned with the government on that, and that is exactly what they've done in setting up an FTA that I think is very nice, very carefully worded, and it's a win for both parties. It is a win for Europe, it's a win for India, but it takes away the negatives. The opportunity comes from the standpoint that we have the ability to sell 2.5 times what's coming into Europe and do that at a 0% duty. And that's an opportunity that is a meaningful one for us, and something that we will take advantage of as time goes on.
Janki?
Yeah, hi. How are the raw material prices trending for you all? Because some of the other automakers have indicated that they'll be taking some price hikes. Also, second question is, how long do you expect the impact of the GST rate cuts to affect your business and create demand for your vehicles?
Yeah, there is a increase in commodity prices. More specifically, two areas. One is anything that's around precious metal. So that's seeing a big increase, as we've seen in other similar areas like gold and silver. The precious metals have moved up with time. The second is the impact of the dollar. So these are the two kind of very tangible increases. There has been some increase in steel, but that's not something which is worrying or out of the ordinary. We have just announced 1%, approximately 1% price increase in auto, which we believe will take care of this in the immediate short run. That kind of will cover most of the increases that have happened up until now on a point-to-point basis. The question on GST is I think a very interesting one. We do think that this is a trigger for overall economic growth of the country, and we should not only look at the impact of GST on a particular product category. So when the GST enables consumption and growth, the macroeconomic parameters will go up, GDP growth will accelerate, which creates its own demand. In specific segments like tractors and commercial vehicles, which are very purchase behavior is very linked to cost of ownership, that is a fundamental gain that stays. As we're seeing right now in light commercial vehicles, 8 to 10% drop in price has led to a 4 to 5% increase in profit per operator as their operating profit. So that's a fundamental benefit that goes to the consumer, and that does trigger growth for we believe a point for a reasonable amount of time. Similarly, in tractors that we had shared the long-term growth modeling, there is arbitrage between labor cost and cost of ownership, and as cost of ownership comes down, that becomes a very important variable which drives industry growth as well, and which is why we revised our long-term CAGR growth for tractor industry, a couple of months back when we had the investor meet as well. So we definitely on the commercial space, which is commercial vehicles and tractors, we believe this is a sustainable impact. The benefit in passenger vehicles is going to come out of the overall growth in economic, not just from the price correction. Anish, you want to add?
I do think that the GST cut will be beneficial longer term as well, because there is a lower amount that a customer has to pay for that product, and that will continue to stimulate greater demand as more customers either upgrade or buy vehicles for the first time.
Okay, I'll take a few questions from that has come online. Sohini has two questions. She's asking what will be the initial capacity at Nagpur for the first phase in 2028, and what is your outlook for tractor sales in the US after the trade talks? Players like CNH India resumed exports and tractors and components and see a significant upside.
Sorry, I didn't get the last part, man.
She's saying players like CNH India have resumed exports of tractors and components and see a significant upside. So she's asking what is our outlook in the US on tractor sales?
Okay, so the second question is related to our tractor outlook.
Yes.
And the first question, can you clarify?
Initial capacity at Nagpur for the first phase in 2028.
Yeah, so
specifically for the US business, exports to the US.
Yeah, so on Nagpur, firstly, we've announced that as our new greenfield project, as you all are aware. So just give you a little bit of a more holistic response. We have set this up in a way that we will make tractors as well it'll have its own plant within the same land plot of over 1,000 acres that we are buying, between 1,000 and 1,500. So tractors capacity will move up in a phased manner to about 100,000 tractors. We also will make a new portfolio of SUVs there, which will move up to 500,000 over a period of time. We will design the plant in a way that capacities can be set up in a phased and modular way. It never makes sense to put all your capacity that you are expecting over a period of time up on the same day. It will be designed in a way that we can modularly increase it. The first lot that we said of the new IQ platform, which is between the 3 or 4 that we showed, which was Vision S, Vision T and Vision X, we'll of course not share today which is the one coming out first, but whichever of that comes out first in 2027 will first come in 2027 from Chakan. That's where we've made the first phase 1 of the capacity increase for that portfolio of products. The Vision X will certainly come from the new Nagpur plant. Some of the increased capacity for the Vision S and Vision T also will have the ability to come from Nagpur. The fine tuning of how the capacities will be shared across new products, announced products and existing products is something that we'll fine tune over the next 2 to 3 months. But broadly the direction is auto capacity will go to 500,000 per annum and tractor capacity will go to 100,000 per annum. On the US question, it's been a difficult 8-9 months as we moved to very high increase in tariffs. We had held back selling too much at 50% tariff. We were only selling what was absolutely needed in the market. So we were hoping for a resolution to this trade agreement issue, which fortunately has happened now. So we have 50%, so-called 50% tariff material in bonded warehouses in US, and that we will start feeding into the market once the executive order is actually passed. What changes now is we are reasonably competitive with all other countries from where imports of tractors are happening. Otherwise, there was a disparity. Most of the countries were at 15% tariff and we were at 50% tariff. So that was creating a situation which was uncompetitive, and we did lose some amount of volume through that process. With the 18% tariff, we are in the same ballpark as others. We have a very strong proposition with the OJA platform, which has started getting very good response. During the course of this period, while the industry has degrown in North America and has over the last 2.5, 3 years, we did gain a share point, and the less than 20 horsepower segment, which is where we've launched the OJA series, has actually got very good feedback, and we are close to 9 to 10% market share in that segment. So, sorry? And we're, of course, we've been the number 3 player in North America for a long time in less than 100 horsepower segment. So overall, it's a very important market for us, and the stabilizing of the trade agreement will certainly help us build the business back and hopefully get into growth phase soon.
Thank you. Utkarsh Agarwal from Business World. Your SUV revenue share in Q3 is 24.1%. How much of this is coming from premium versus entry-level models?
The ratio by volume roughly is more than 4-meter vehicles are roughly at about 60%. Less than 4-meter vehicles are about 40%. The one thing we do want to point out is some impact that overall revenue would have had in Q3, because our highest revenue selling SUV was XUV 700. Through November and December, we phased it out to create room for XUV 7XO. So we actually had lower sale impacting our revenue by way of mix of product of our highest revenue per unit product, which was XUV 700, which of course will come back now that we've restarted selling 7XO. But roughly on a revenue basis, my sense is our top end models would contribute roughly 70% by way of revenue, and the lower ends would contribute 30%. By volume, it is 60-40.
Thank you. Reuters, Nandan from Reuters, he's asking to throw some color on your capacity enhancement. Wanted some more details on the bottlenecks faced currently at Chakan and Nasik.
Yeah, I have covered the more longer term ones. On the short term bottleneck, some of it is to do with our own plant capacity, or 3XO. So the ones we urgently are trying to solve for is 3XO, which is also getting very good traction in export markets. So that's that's at its limit of capacity. Bolero and Bolero Neo both got very good response after the refresh, so that's at limit of capacity. And some of the Nasik models, Scorpio N is doing extremely well. 7XO has got a very good response, and the full capacity is going to get consumed, which is close to 9 to 10,000. So basically what we're trying to do is look for debottlenecking in specific areas, either in our own plant or some engine capacities related to either suppliers or ourselves. And we believe that this will unlock maybe 3,000 to 5,000 of additional capacity per month for existing products on the ICE side. Of course, we are adding another 3,000 to 4,000 capacity during the course of this year for the BEV range, which is specifically 9S. So if you were to compare, F26 to F27 by way of what will happen within the financial year F27, by August, September, we hope to increase 3,000 to 5,000 capacity of existing ICE products between Chakan and Nasik. We will also add 3,000 to 4,000 of EV capacity through 9S, which really increases our capacity, stated capacity for ICE plus EV in F27 by about 6,000 to 7,000 a month. We were not fully utilizing the capacity of 700, which we hope to do, so that there's another upside of 3,000 based on the demand that we are seeing of 7XO.
I'll take one more question that has come here, then maybe we can come back to the room. Shahkar from Autocar Professionals. He would like to know the buses demand has been witnessing a trend of slowdown after a strong run-up in the past few years. If you can provide some color on the trend specifically at SML, Mahindra, bucked the trend with good sales numbers this time.
Yeah, SML has seen very strong bus demand even in the last quarter, which is reflecting in the numbers. So I think 55-60% growth. Overall, the market for light and heavy, medium to heavy commercial vehicles is seeing a strong growth, and SML has had some export orders as well, which is helping the overall volume numbers over and above the performance that they've delivered in the market. So we just want to reinforce that there's a lot of optimism we have with SML now as a part of the overall trucks and buses business, and we hope to together build a very strong market presence.
Prerna? Yes.
Hi sir, Prerna from Autocar Professional. Could you elaborate how was this quarter with respect to exports, and also with in the context of the trade deals? Is there a bigger export potential for Mahindra and India-made products? How do you see that potential going forward?
I think the second question Anish spoke about, especially the EU trade deal will open up will open up a lot of opportunities for us as we look at how we can take Indian vehicles over a period of time to EU. We yet do not have a lot of our new models in left-hand drive, so it's not something which we will be able to leverage immediately in the short run. But over the next couple of years, we would have many of our mainstream models by 2028 coming out in left-hand drive as well. So we would have a more robust EU-based strategy. We also will be having the lifestyle pickup portfolio which we had showcased some time back. That would come in 2027 as well, which again could have a strong export performance. Rajiv, can you help me with the export numbers on quarter 3? I think your question was for quarter 3?
Yes, yeah.
It was around 12,000.
Yeah.
4,000 per month.
Yeah. So roughly about 4,000 per month.
Thank you.
Yes, please.
Hello, my name is Jabir. I'm from Current Bike. My question was, now that the 9S you had bookings open for over a month now, deliveries have started. Now, what kind of demand split are you seeing between the 9S and the 9E?
Yeah. So both are, all the three products are doing well, and we'll have to wait and see as demand for each one stabilizes what the mix will be. Right now we are seeing a very strong demand for 9S, but 9E has not has not got cannibalized, let's say, as much as we thought it may. The reason for that is that it seems that there are two completely different segments. There are those who do want the more cutting edge style that 9E has, and the very distinctive road presence that the 9E and the B6 bring. We see a lot of that in South and West in particular. We had earlier mentioned that the demand that we were expecting for 9E and B6 in North was not as strong as the Mahindra brand typically is very strong in North. So with 9S we are seeing a very strong demand in North because it's a more conventional SUV form, 7-seater. So we actually feel that 9S is going to bring in a new set of customers who wanted a more conservative SUV form, which 9E does not have. So we believe there's a segment for each, and while there are people who will compare one versus the other, but 9S is opening up a different category of customers, which is more conventional SUV buyers like we had. We've shared in the past that almost 80% of the customers that we got for 9E and B6 were people who had never bought or considered a Mahindra earlier. So we brought in a completely new audience of customers, a segment of customers, and we believe that will continue with those two products.
Okay, last question. Akbar, you had a question? Are you done? Ekta है Z Business.
I'm Ekta from Z Business. सर अभी आपने प्रेशियस मेटल्स की प्राइस बढ़ने की वजह से 1% प्राइस हाइक के बारे में बात की, तो सर उसके बारे में अगर आप कुछ समझा सकें कस्टमर्स के लिए, क्या आपकी गाड़ियाँ खरीदना महंगा होगा?
या 1% प्राइस इंक्रीज हो रहा है तो महंगा ही होगा, लेकिन ये भी हमें ध्यान में रखना है कि 10% GST भी कम हुआ था. सो एक्चुअली आप अगर सितंबर से फरवरी कंपेयर करेंगे तो इफेक्टिवली कस्टमर की प्राइस करीब 7 से 9% कम हुई है.
Thank you, sir.
Okay. Thank you. That brings us to the end of this conference. Thank you so much for being here. Thank you. If there are any other questions that we didn't answer, you can definitely write back to us. We'll try and answer them as soon as we can. Thank you so much. There's some refreshments. Please join us.